The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Ishares 20-year Treasury bond ETF with the ticker symbol TLT. I will first go over what I see on the daily chart and finish the video off with the weekly chart. Here we have the daily chart for TLT, and since we are still inside of this macro range pattern, I can go ahead and draw it on the chart. So we have a triple bottom at the lows, and we have pretty much a quadruple top going on at the 110 level, support at the 100 level. So this is pretty much a 10-point range still, and you can see how well prices are being contained and manipulated inside of this 10-point range. So you can see that prices are also inside of a micro range that's orange. You can see we have pretty much two touches on the top, 3 touches on the bottom. So this looks like a ranging pattern inside of the larger ranging pattern. The bulls were attempting to break out numerous times. I mean, they're not going to try forever. Eventually, they're going to give up. So this was one impulse higher. And normally if you see something like this, the market can do a replication of it again. So, we can go ahead and move it over. So this was the first attempt at getting the measure move target at the 116 level. And then this was the second attempt right here to get the 116 level. It's failing because this resistance at the 109, 110 level is strong. So that's why it's not allowing the price to pass through it. So the bulls are not going to try forever. Looks like they're giving up. Last week, prices got back below the EMA, bounced at the support, went back up to the EMA, and found resistance. So this red bar signifies that the EMA is acting as resistance. So we're probably going to be retesting the 103.67 level, and we'll see if that holds. Because if it doesn't hold, then we can go back down to fill in this gap right here and potentially reach the opposite side of the range at the 99.60 level, because that's the range rules. Prices go from the highs to the lows, lows to the highs. Since we hit the highs, prices are attempting to reach the lows, but again, the keywords is attempting. If this support level at the 103.67 is stronger, then that would be a failed attempt from the sellers. So we'll see if that occurs. They're going to try 2 attempts to get there. So this was the first attempt. Bulls brought the market up. Currently, it's in the second attempt. So right now, there could be a short trap right here. Let's say we tick below this red candle. We bounce up, close above the EMA. That might be a good short trap for prices to hit the upper side of the range again. So we'll see if that occurs. Right now, it's probably not a good idea to sell because you're going right into the measure move target at a triple bottom. It's not a good idea to go long either because this EMA is looking like it's proving to be a resistance, and this potential channel could be in play. This one right here. So there's bearish and bullish signs currently on the chart. So we'll have to wait and see. But as right now, prices are looking slightly more bearish than bullish in the short term. In the macro term, it still looks okay for the bulls. Even if you see a breakout on the bottom side, it could just be a failed breakout to rally higher, and potentially even a failed breakout on the macro scale could just be a failed breakout to rally higher. So we'll see if that occurs. But as of right now, it's looking kind of bearish. I'm looking for this 103 level, 103.60 level to tell us what the market wants to do. So that's everything I see on the daily chart. Me personally, I would wait for shorts to get trapped. I think they could get trapped if prices drop below this red candle, immediately reverse, and it might signal potential reversal. So we'll see if that occurs. If we just slam right through, then obviously it wasn't a trap. Longs are the ones that got trapped trying to buy right here. So we'll see if that occurs. But as right now, prices are looking a little bearish in the short term. So that's everything on the daily. Here is the weekly chart. You can see that last week's candle was a doji candle, which is a indecision candle. So you can see there's really not a lot of body to this candle right here versus the other candles. So this means indecision. The EMA is pretty flat for several months now. So a lot of indecision in the market. Normally you will get that when you have 2 conflicting patterns going against each other. We have this downtrend pattern in play, and then we still have this measure move target still trying to be reached. So right now, buyers and sellers are just going back and forth. They're like, okay, I want to reach these lows because we had a breakout of the yellow channel, but the bulls are not letting me because they want to reach the measurable target. And then the bulls are like, okay, I want to reach the measurable target, but the sellers want to reach the lows of this channel. So what do? Well, they're just between these levels right here, this 10-point range. So we can put a horizontal line at the 110 level because prices are unable to break that, and we could put a support right around the $100 level because that's support too. So we have support and resistance in play. So kind of sideways, you know, it's looking more bearish by the day, but the macro structure is still bullish because prices are unable to reach the opposite side of the range in 2 attempts. This is the first attempt, pull back, second attempt. So sellers tried 2 times. Market moves in 2s. So again, if you see some aggressive buying occur, then you know that tells me that the sellers failed to reach the opposite side of the range. This measure move is still in play. We could probably see a breakout of this 110 level and potentially reach the measurable target. If we see aggressive sellers occur, start coming back in the market, then that tells me the second leg did not fail and is still in formation of reaching the opposite side of the range. So it just depends on what you expect to occur, and then you can capitalize on the failures in the market. So as right now, I would be expecting the shorts to fail. So if we see some aggressive buying, you know, that would be probably the signal that the prices are going to be rallying higher. If it doesn't fail, then obviously, you know, it dropped down. But either way, you probably don't want to go short either because I said before, there's support there, and the measure move was reached on these 2 legs. So we'll see what occurs at the end of the day. But as right now, you know, it's just pretty much sideways. Either way, next week we're probably still going to be contained inside of this 10-point range. So that's all I have for TLT on the daily and weekly charts. This is Vee Trades, and thank you for your time.